Folks, welcome to Sunday Night Stock Charts Live. This is Bob Desmond, and welcome to another week. This is where we spend a few moments preparing for the coming week. We'll take a look at the futures action. I'll give you my thoughts on the markets overall. The big question of the day or the weekend is, will we see a retest of the lows? Have we bottomed? And I'll tell you, the sentiment towards us not retesting and towards the markets moving up higher and the bull market gaining steam, more momentum, it's prevailing. So therefore, more and more that my contrarian antenna go up, and I have to say, I think that the crowd probably has it wrong. I'll go over the charts and we'll discuss it. We'll go over, I have a bunch of symbols that I have to go over. CNI, OSTK, HEAR, YANG, Tesla, TSLA, HLF, and MAR. We're looking at shorts. Before we go to the headlines and the economic data and some of the catalysts that I think that aren't really being calculated into this market right now, it's all about the Fed at current, but that's going to change really, really quick, effective Tuesday. And we'll talk about what that change is going to be. But first, Franklin, good evening to you. Yep, we'll prepare. Welcome. Thank you. Oliver, yes, they have a deal, OPEC deal, 20 billion. Yep, that's in the books now. The Mexicans held out very, very strong. They cut a good deal for themselves. TA, hello. Chuck, good evening. Eric, happy Easter. Will, Amerigo one, like your name. All right. Thanks, all. And if I could ask you to smash the like button, I'd really appreciate it. It helps me out with the YouTube algorithms. Let's get to it. Let's talk about the futures market. Jedi, hello. Trader Isaac, hello. Thank you for that. So we have the E-minis, S&P E-minis up about half percentage point. They're off the highs of the session. I mean, we just opened up. We'll let the futures settle down here a bit. And this is no shock that we're popping up higher. And it could quite very well, absent some negative news coming out overnight, it'll probably continue on into the new trading day tomorrow. But there is a catalyst out there I'm going to be talking about that may cause some big institutions to sell tomorrow afternoon to take advantage of the liquidity that is being provided them at current. The Nasdaq, we're up just shy of a third of a percentage point. We're coming off the highs now. We already have, what's the high here? 83.27.5. We have a new weekly high on the futures for the Nasdaq. Do we have the same for? Yeah, we have the same new weekly high for the E-minis as well. So we have a continuation move higher here. Small caps. So we're beginning to see some selling into strength here. A new weekly high. Up about a quarter of a percentage point, backing off now. Keep in mind, we're going in, these are 4-hour charts. We're going into the week somewhat overbought. We have RSI on a 4-hour basis at 74, about 74. So can it go higher? Sure, but remember, we're talking about an index here. To hold above 75, 80 for any length of time is asking a lot for an index. And the small caps have come a pretty long way. Let's take a look at the US dollar, then we'll segue over into commodities. The dollar is down at current, but off the lows. Why is it showing down here? We're showing down, but it looks up to me. I don't know why. The dollar looks up to me. I think this is wrong. What else do we have? Let's go to gold. Gold down half percentage point. I think that we are just consolidating here. I'm loving gold. I mean, we'll go over a weekly chart of gold in a moment, because while I'm still very bullish on gold, the miners, as we have been, we're becoming a little bit overbought relative to the third standard deviation Bollinger Band on gold. So we may get a pause here, and that's a good thing. You don't want to get too overbought too quickly. Germano, happy Easter, brother. Have I noticed that NUGT, JNUG, Gush, and other? Yes, they were, because they're broken. They were unable to manage those funds. I think that they are supposed to be leveraged until May, but from what I've seen so far, they're trading as 2 times, and they change from day to day. They can't hold that. As a matter of fact, if you bring up, what was the last time? I think it was NUGT, the last time they did this. They send out alerts. Oh, they're going to do a reverse split on NUGT. Yeah, here we go. So they can't hold. You got to be really careful with these funds. Due to significant market disruption and volatility, because these things change, they rebalance each day, and the derivatives, they were unable to achieve the 300% performance that they're supposed to. On this particular day, it was it 220? So really disappointing management out of Direxion. So we have been backing away from NUGT in favor of the GDXJ to try to get away from these leveraged ETFs. Way too much derivative exposure. Trader Isaac, NEM, probably the best gold miner out there. No doubt about it. Patrick, hey. Patrick, I saw a text from either you or Art about a realty REIT that you were looking at. Did you want to go over that tonight? My phone died, so I didn't get to. I think it began with a V, the REIT, but my phone died. I haven't been able to charge it up yet. So if you want me to go over it, just pop the symbol in, and we'll go over it. Well, Smithfield is expecting to cut their production, shutting down a plant. Food supply, okay. Oh, so they're a producer of pork. Gotcha. So food prices are definitely going up, no doubt about it. And that's from my wife. All right. So avoid these leveraged ETFs. Silver. Silver is down as well. We are very long of silver. We broke down below a support level. This is only a 4-hour chart, but it's just something to take note of. We broke down below a support level. And that's a bit of a concern. Are we rallying back in an effort to try to recapture and we get a failed retest? That's a bit of a concern. So caution flag on the track here for silver short term. Crude oil. They got the supply cut. Oil's still down a half percentage point. Not good. Good for the consumer, but God forbid oil goes down. God forbid. DRV, is that a leveraged ETF? Yeah, man. I would say that if you have extreme market volatility, you should avoid these ETFs, because it's been proven that they cannot manage these on a day-to-day basis when you have extreme volatility. So in a normal market where you have VIX down below 30, it's probably okay to trade these names. It's when you get VIX that's soaring through the roof, they can't manage these funds. So you need to be really careful. I don't care what sector you're trading. When VIX goes high, you need to be very, very careful because apparently they cannot manage these funds each day because they rebalance each day. So be very, very careful. It's not like a monthly rollover or a weekly rollover. It's a daily rollover. And you got to be a rocket scientist to rebalance these things. These are not simple instruments. Okay. Pat, all right, cool. All right. Looks like Isaac, it looks like they're doing that right now. They're selling it off. Let's go back to oil for a second. Trader Isaac just said, is it a sell the news event? You know, I wouldn't short oil, but it looks as though what happened here is that we got a rally in the anticipation of a cut. Now we're seeing the selling. Look at the lower high here, and now we're breaking down to new lower lows. Right? So this is not wonderful price action on oil. It's not good. It's selling the news. So RSI, lower highs. Not a good start for the week on oil. Now we're down 1.63%. I see a lot of overhead resistance on SPY. I'm going to be going to that in a moment. Yes, a lot of overhead supply. What are your thoughts on the bank earnings? Love the question. We're going to be talking about bank earnings in a second, Kat. Your mind is exactly where my head is. So, Bitcoin. Let's take a look at Bitcoin. Sorry for the noise, the silence. Awkward pause. I would not be a good radio commentator. All right, here we go. So Bitcoin taking it on the chin, down 3%. We were flirting with resistance, and this is why it always pays to wait for the breakout. Buy the event, so what? You pay up a couple of bucks, but at least your probability of being correct on the trade goes up exponentially. So if you were buying in anticipation of a breakout, you're getting hurt today. So yeah, down 3%. It's not broken. We're still in a tightening formation here, a wedge formation. The RSI is very, very weak on Bitcoin. Very, very weak. So we have lower highs, lower low. We're probably coming down here to this lower band of support on Bitcoin. So I would not be a buyer here at these levels. Let's take a look. We'll come back to the futures before I sign off. Let's take a look at the economic calendar. For those folks just joining in, could I ask you to smash that like button, please? And happy Easter. Thanks for joining in. The crowds are getting bigger and bigger. It's great to see. So thank you for joining me, especially on an Easter. And I hope everybody's safe with your families. Okay. Pat got back to me. VNO. Okay. FOMO buyers will buy the dip from SPY resistance this week. Could be. Could be. All right. Let's take a look at the economic data that's coming out this week. We know the bad news from last week, right? There's no sense in rehashing it. I mean, it's just bad stuff. What's coming out this coming week? The key number to watch, I think, is going to be ongoing unemployment claims. We had that last Thursday, comes out every Thursday. For the most part, up until 2 weeks ago, everybody ignored the number. But now it is the number to watch. We have retail sales coming up on the 15th. And normally I would say, because earnings kick off on Tuesday in earnest. And as Kat pointed out, you have big bank earnings. Who do you have coming out on Tuesday? JP Morgan. All the money center banks begin to report this week and then into next week. And next week you get the regional banks. And so you'll get a good feel because the banks know. They'll know how the economy is doing at current and what's going to be the key metric to watch. Delinquencies, mortgage delinquencies, auto loan delinquencies. That's what I'm going to want to watch for. Because if you see those delinquencies surpass what is expected, what's the Federal Reserve going to do? Come out with $2.3 trillion every single day when the market's down 1% in the pre-market? At some point in time, you get Fed fatigue. So the market is still susceptible, and I think that this is going to be the first week that we're going to hear from the private sector just how bad it is. And normally, I would say ignore the economic data because it's earnings season, it's silly season, everybody's going to want to try to jawbone the market up. I think it's different this time, and I hate that phrase, but this time I think you need to watch because this is an unfolding story. We don't know what we don't know yet. Even the Federal Reserve doesn't know what they don't know yet. Corporations are no longer, many corporations, not all, are no longer providing forward-looking guidance because they don't know what their business holds. So what do they tell the analysts? If they can't tell the analysts certain metrics that they're looking for, how do the analysts do their jobs? It's a guessing game at best at current. But the banks will be reporting earnings and we'll get a good feel for how the consumer's doing. And we're also going to get retail sales for March. This is going to be the first pure month of data coming in where we get a feel for just how bad is it. Industrial production. I mean, the prior month we had a positive number. This one, it's just how negative is it going to be? The Homebuilding Index. The home builders have ripped through the ceiling. Except you have food lines in Van Nuys, California, down in Florida, and any other host of places out there. I don't know who's going to be buying new homes. So you have the Beige Book coming out Thursday. Again, weekly jobless claims, building permits. That's a forward-looking indicator on housing. And that could cause the home builders, if that comes out really, really weak, you could see the home builders take it on the chin. Now, Kat brought up earlier that we have a lot of overhead supply in this market. And we do. We do. So where are we at current? We have done a 50% retracement. I'm not big into Fibonacci's. I use them as a measurement. I'll take it out every once in a while. I couldn't hold a conversation for any longer than 5 minutes with regards to the Fibonacci. So please, don't engage me in conversation. I use it as a measuring tool only. There are guys out there, Elliott wave theorists, this is their religion. It's not mine. And I respect their perspective. I watch their videos. I appreciate what they're talking about and the science behind what they look at. And Elliott wave uses history. I use history, but I use it a different way. So we have retraced 50% of the move from the lows of March 23rd. We have come a long way. Now, this is the S&P 500. We have resistance immediately above, and we backed off of those highs at resistance last week. Do we crash this week? I don't know. I'm not that smart. But the catalyst to send this market higher or lower, I think no longer lies with the Federal Reserve this week. I think that they had their opportunity on Thursday. You had a market that was set to roll over because of the horrible jobs data. What did they do? They shot off a bazooka, another one, 2.3 trillion. And you have to wonder, just how bad is it? And when you take a look, I'm going to come back to this. When you take a look at what they've done so far versus what they did back in 2008, relative to the market performance, think about it. What are we? This is the semis. I want to come back to this. We are 17.5% off the highs of a 10-year bull market. And the Federal Reserve is doing this, and we're supposed to say all is well? The market, the bottom is in? I don't think so. You got to go back to, here's the post-financial crisis. I brought up this chart in the past. Here was October of 2008, President Bush right here. President Bush signed off on TARP. What did we do? We continued to fall. Now, granted, the federal government was much slower in their response back then relative to what they've done this time around. But the severity of what we're seeing thus far is unprecedented. 17 million people in 1 month are out of work, and more to come. The Fed's balance sheet has never, ever in recorded history expanded this far, this quickly, and we are now the central bank of the world, not just the United States. So I'm supposed to believe, or we're supposed to believe, that all is well. We have a V-shaped recovery, and for all the damage that's been done, and it's still going on, we may open up again, partially on May the 1st. May, it's a moving target. 17.5%. I think there's a little bit more to go, or at least a pullback and a retest of support to gain the confidence of traders. And when you take a look at, I prepared a quarterly chart going back to post-World War to put everything into perspective, because everything's measured post-World War II. That's when you had the United States become the dominant power. The global currency was the US dollar. And so this begins back in mid-1945. This is a quarterly chart. And a couple of things you want to pay attention to here. You've had MACD, which is represented here going all the way back to 1945. You've had two very distinctive, prior to this bubble, two very distinctive bubbles. And each time, it's only gone negative twice, severely negative. And each time, when you go from peak to trough of the top, you had back here a 53%, a little bit more. This is the dot-com bust, 50%, 53% correction. Go over to here, the financial crisis, peak to trough. You had about a 58% correction. Let's fast forward to present day. The worst economic data ever. It's never happened this fast. Ever. Peak to trough, to the lows, we were down roughly 37%. Now, another thing. So we haven't come anywhere near the lows of the prior two major bubbles. And yet you have people out there saying that we've hit a bottom, expect a V-shaped recovery, or as the Federal Reserve is now calling it, a soft V-shaped recovery. What that means, what kind of ridiculous banter that is that we're supposed to buy into, I have no idea. But when you take a look at this chart here, this is, again, a quarterly chart. So we broke down on a quarterly basis. Remember, we're now in month 1 of Q2. So in Q1, we broke down and closed below the lower band of the rising uptrend channel, which began back here in 2009. So normally, what we want to do is we want to pay attention to normal market behavior. What normally happens when you have a stock that breaks out or breaks down? Normally, when you have a stock or an index that breaks out, it breaks out above a resistance level. At some point in time in the future, it'll pull back and it'll retest that support level. Usually it holds and you move on to new higher highs. Sometimes it fails. When you get a breakdown below support, you'll get a rally back, and in an effort to try to recapture that support level, sometimes it recaptures, more often than not, it fails. It's the inverse. So here we are, present day. Let me see if I can magnify this a bit. Here we are, present day. This is magnified. Here's Q2 thus far. For whatever reason, it's not carrying my annotations over. But we are here right up and into this upper band of resistance. So what was support, what was the lower band of the rising uptrend channel, natural support for many, many years, is now resistance on a quarterly basis. The question is, do we recapture or do we fade? I think that the probabilities are that we fade. Why? It's because we don't know what we don't know. How is the market supposed to price in damage that is still going on? How do we say that this is the bottom and you have an expectation by the talking heads that we're going back to some all-time highs in the next year or two? When you have companies that are accepting bailouts from the federal government, they can't buy back their own stock anymore. That was half of the accumulation that was going on during the bull market. So when you have market participants that are no longer allowed to buy back their own stock and you have the private sector broke, who's going to buy the stock? Who's going to provide the liquidity? So as you hear more and more about people saying that this is a V-shaped recovery, and for all I know, what do I know? I'm a guy on YouTube. I have no formal education with a Harvard MBA with regards to economics. I know who to listen to. I know how to divine what's right, what's wrong, and usually it's accurate. What makes sense and what's improbable. And what's improbable is that the coast is clear and we're done going down. We had the biggest sell-off in stock market history. Does it not make sense that we would see a counter-trend rally in a bear market with as much volatility as we saw going down on the way back up? And that's exactly what we've seen. So last week we had the biggest bull market rally on the Dow anyway since 1938. A lot of the price action that we're seeing, gaps up or gaps down, are reminiscent of what we saw in the 1930s. You can go back in time. Northman Trader, he's on Twitter. Some really great tweets he puts out and shares. We haven't had, I think, of the 5 times that we've gapped down any number of times, I got to go back and check out his tweet. I'll share it. I don't want to bastardize it. But a disproportionate amount of the number of gaps down that have occurred have happened since the 1930s in 1 month. This year, in March. Think about it. Think about all this volatility is unprecedented. So do I think it's over? No. And what we have coming on Tuesday, again, earnings. Where do we close out? I've gone over this chart any number of times, and I'm not a big believer in trading off of PEs because, you have different companies with different growth potential. I'm not a big follower of PEs. However, if you're watching the S&P 500 and we are overvalued at current, we're back to overvalued. When companies begin to report earnings, we go from overvalued to extremely overvalued. So at current, we're here. We're back up to overvalued. This is PE. This is GAAP earnings. A read at 20 is overvalued. 15, fairly valued. Undervalued is PE 10, way down here at 1394 on the S&P 500. Fair value, 2092. Overbought or overvalued, 2789. What's this chart going to look like 3 weeks from now after we get the major S&P 500 companies reporting? What's this chart going to look like? It's not going to be pretty. So we have a lot of headwinds in front of us here. And again, for all I know, we're going off to all-time highs again. We had a Federal Reserve that's very, very activist. I'm afraid that I'm going to wake up one morning, we're short the trip Qs. They started buying high-yield debt funds on Thursday. Or they announced they would be buying the JNK, HYG, with your tax dollars, my tax dollars. And what's going to prevent them if the markets begin to roll over yet again Am I going to be, is my counterparty to my short of the trip Qs going to be the Federal Reserve? How am I going to do there? So this is a dangerous market. If the free markets, I mean, you got to put that phrase free market in air quotes nowadays. Bitcoin dumping. So it looks like something's going on. Semis cracked. Big time semis. Horrible. Let's go to the semis. I purposely have that chart prepared. The semis last week, very, very poor price action. Yes, we were up 10.5%. Let's move past that. We rallied up into the 50% retracement level, and we backed off hard. Daily chart. Take a look at this price action Wednesday forward. And this is Thursday. I keep thinking Friday was a trading day. Sorry if I keep saying Friday. So this is Tuesday's price action, Wednesday, then Thursday. I apologize. This is a reversal day, very bearish. Then we had an inside day on Wednesday, Thursday, an outside reversal day. The declining 50-period moving average is acting as a declining ceiling on the tech sector. This is growth. This is not the time of an economic cycle where you want to be long of technology or long of growth. It's just not the time. XLK, very similar in terms of price action. Bearish key reversal bar on Tuesday, Wednesday inside day, Thursday, bearish reversal bar. Not a bearish reversal bar, a filled candlestick. It means it closed lower than where it opened. So the price action in the tech sector, in high growth, is not good on a daily basis. And you saw a lot of topping action last week. So be careful, especially now that you have earnings coming out. Let's go back to the pre-markets here. So Bitcoin continues to drop. S&P 500 is now, well, okay, there we go, is now negative. We have an outside reversal bar on a 4-hour basis, assuming that we close where we're at or worse, this candlestick here. So we have fully engulfed this candlestick. Very bearish stuff. We are now down 1.3% on the E-minis. Watch for a close below, let's call it 2750 on the E-minis. This candlestick, 4-hour basis. Let's stick with this for a moment. Let's see what else is going on here. The Nasdaq 100, of which we are short, down 1.25% now. The thing to remember here with the Nasdaq 100, these are your trip Q names, right? The Nasdaq 100, where you had the Nasdaq, we went over this earlier. The Nasdaq has put in a new weekly high on the futures. The Nasdaq 100 have not. And these are your former leaders. Let's take a look at the Russell 2000. Outside reversal bar. Yeah, we have engulfed at current. Again, this candlestick is not closed. It just opened. It could easily rally back. We're not drawing conclusions at current, but the price action is not wonderful. We have taken out the lows of the prior bar. So what I would be watching for is a retracement down to this 1180 mark. And this needs to hold. So we'll keep an eye on this. Before I sign off tonight, we'll come back to the futures action, and we'll revisit it. It's a very interesting setup here. Let's check out bonds. Bonds are rallying. That's a good sign. Let's go back to gold. Wrong symbol. Let's go back to gold. All right. Gold is weakening here even further. We haven't broken support yet. We're down nearly a percentage point. Now, I spoke about silver earlier. Not looking that great. Let's see if we've pulled back. And we have. Remember, and this is what I was talking about. Same exact price action, but on a different time frame. All right, we're looking at a 4-hour chart. Right. So when I signed on earlier, we spoke about silver. I said that it had broken down below this lower band of support. And what we were doing as I was speaking about it, we were flirting with an effort to try to recapture that support level. There's no difference. Than what we're seeing on a 4-hour chart, than what I'm looking for on the S&P 500 quarterly chart. Same price action, same behavior, same psychology, just a different time frame. So we have pulled back. That effort to recapture is now fading. A lot can change between now and tomorrow morning. Federal Reserve may just buy out the stock market for all we know. Let's check out the Vix Futures. They're moving up. We have a higher low here on the Vix Futures. Take note of RSI here. RSI has put in a higher low. Please cooperate with me. Whenever I'm live and I try to do this stuff, I am made very, very humble, very, very quickly. Okay, so here we have a higher low on the VIX. And what I'm finding very interesting here is this. We've broken out on RSI. We're off the highs of the session, but we are flashing. So it's doing what we're expecting, right? We're seeing an outside reversal bar on a 4-hour basis with the S&P 500, the Russell, the Nasdaq 100. What are we seeing on the VIX? We're seeing an outside reversal bar, a bullish engulfing versus a bearish engulfing on the S&P 500. We're off the highs of the session, and we're off the lows of the session on the S&P 500. Beware of the RSI here, folks. Let's clear this up. I want to redraw these resistance levels to reflect my concerns. All right, so here we found a bottom, quietly consolidated. Now, what I'm looking for here is a breakout above this upper band of resistance. All right, so I wouldn't go adding to short positions until I see a fact, and that fact must be an event has occurred. And that event must be the VIX breaks out above the upper band of resistance and closes there. Not just trades there, but closes there. And ideally, retest what is currently a resistance level should in the future act as support. If that happens, my probability of making money on my shorts as I add to them increases dramatically. AR, long way to the open, but the SPX has retraced 52% of the drop. Yep. Likely going to be love your attitude. Manoj, if we pull back, what will be a good entry point for GDX and USLV? Okay, that's a good question. All right, so we have a lot to do here, a lot to get to. And folks, if you're just signing on, if I could ask you to smash that like button, I'd really appreciate it. Thank you very much. Very good crowd tonight. Cool. Thank you for being here. Happy Easter to those who just joined in. Okay, so let's go to some of the charts that we're watching for Manoj. Let's go over USLV, GDX. And all right. 89 cents a gallon in Wisconsin. God damn. It hasn't gone down at all here on Long Island in New York. Still as expensive as ever. All right. Let's go through some chart requests. And then before I sign off, I'm going to go back around to the futures, so stick around. You know what? I'll kick off with INSG. I know Pat is always interested in that one. Trent, thank you. Smash that like button. Thank you. INSG monthly chart. Looking good here. We obviously have resistance up at 9.72. A beautiful month so far, but the month is not even halfway over. So all it is just an observation. A lot can happen before the end of the month. Beautiful week last week, closing above resistance. This orange line here is resistance. What I'd like to see this coming week is a retest of this support level in orange at around what, 8 or 9.14, maybe a little bit lower than that. If it holds by Thursday, Friday, we're still trading above that mark, I would look to add more, assuming the market is holding up. If the market's falling apart, then all bets off. I'd be looking to book profits here and move to the sidelines. But assuming that we hold up, I would look to add more on a rally up and through 9.72. Daily chart. 972, immediate resistance above. Again, I'm looking for a pullback and a retest here of support. The chart looks really good. Definitely in a bull market. Very healthy chart. Not much not to like, with the exception of a bit of resistance above. That's it. Let's go on to O&I. That's not the right symbol. O&I. I think this is a railroad. This is not coming up proper. We'll have to go to stock charts. O&I. That symbol is not working out. I'm going to have to recheck that one. That may be on the Toronto Exchange. I'll come back to it. OSTK. Overstock. Okay, so we'll begin with a monthly chart. Obviously, we are still in a downtrend, right? We're in a bear market here. RSI, though, is beginning to show signs of life. So a bit of a divergence going on here, where we've been putting in month over month lower lows. RSI has stopped going down. It's consolidating here. That's a bullish event. So something's happening here, and we've broken out on RSI. We have an up month so far. The month is not over. We're at resistance. You cannot buy these shares. I don't believe that I'm going to leave off here changing my mind, because we are at resistance and we have a market at current which is weakening up. We broke out on a weekly basis, but we have resistance above at 955. Where do we close? 744. Too much risk, not enough reward for me in this market environment. Daily chart. Now, on a daily basis, I really get somber really quick, right? We spiked up higher on Thursday, right up and into the third standard deviation Bollinger Band. What do? Sellers moved in. So be very, very careful here. While we're seeing some, as Larry Kudlow used to say on his TV show years ago, we're seeing some green shoots from a higher level view on that monthly chart. You have some issues here in terms of resistance on a monthly basis, on a daily basis, and I could overlay using TrendSpider. If you like TrendSpider, use the link down below. Use CT25Z as your discount code. Get 25% off. Here's that upper band of resistance on a monthly basis, right? This dashed line is a monthly resistance line. We nailed it on Thursday and we backed off. So that's the market sending you a signal. And we could quite very well see a resumption of the downtrend here with the monthly resistance level acting as the upper band of resistance where you want to sell those shares. You want to buy them down here, sell them up here. I would avoid. I would watch, but I would avoid. HEAR. Turtle Beach Corp. This is a story stock in that I believe they make earbuds, and they usually rally when you get a new release of PlayStation or whatever the heck the kids use them for. I'm just showing my age here. But the chart is looking good, and there's a new release. I heard somebody talking about it the other day. There's a new release of something or other coming out in a few months. Do your research on it. I haven't really looked into it that much. I just care about the chart. We have broken out. We broke out here in January, and we've been doing retests ever since. So far this month, with the highs of the month, we have engulfed last month's move. So looking good here on a monthly basis. No breakout. Well, we're very close to a breakout on RSI. Stokes are hooking up. You have a nice little W formation here on a monthly chart. Weekly view. All right, so I can't buy these shares at current because we have immediate resistance above at $7.01. We closed out at $6.79. So the play here would be watch for a pullback and a retest of the support level. Can easily happen. Nibble on some shares there. Add more on a breakout above resistance. RSI is broken out. There you have it. Stokes doing exactly what you want. They're breaking out. Now you're getting higher lows and higher highs. Good stuff. Daily chart. Again, can't buy the shares. We have resistance immediately above. We can overlay the weekly resistance on this daily chart. There you have more resistance above, but good support down here, man. So what I want to do is I want to create an alert because I'm interested in the trade. I got to go back to the weekly chart. This does this from time to time. Okay. So I want to know when we touch. I don't care about a breakthrough or breakdown. HEAR, weekly support, retest, possible long trade. I'm going to keep this active for a few weeks. It's a story stock. And if the market weakens up here, it may just provide us the catalyst to get some weakness in these shares and provide us an opportunity to get in at a good price point. So I'm going to watch it. And I'm also going to set up an alert. If this market does in fact hold up, well, then I want to buy strength. We'll keep it on a daily basis. You know what? I'll keep it 1 hour basis. Weekly breakout. All right. So again, I'm going to keep this active for 20 days. And we're good to go. I don't have to worry about this thing. I'll worry about it when I get my alert. So that's set. The next chart up, YANG. This is a bear ETF. We've traded this in the past, done very well with it. This puts you short of China. And the day of reckoning with mainland China is soon going to be upon us. Love the weekly price action here, despite the fact that we closed down last week. So we'll do a higher level view here. Begin with the monthly chart, stay consistent. You can see that we are holding support. Weekly chart. Now, last week, we were down on the week, but we closed well off the lows of the week. And we held support. Would I be a buyer here? No, not yet. Stokes are rolling over. They're down below 50. Rallies tend to fade. And we couldn't eke out a gain last week. Daily chart. I'm not convinced that we're done going down here. Especially if China's numbers are accurate and they're ahead of the curve now. They could see a rally in the Shanghai Composite. So I would want to see more of a retest here of support before I got long of YANG. It's flirting with a breakout. I think it's a head fake, and I think it's going to come in even more. So I would be careful here with YANG. Be careful. Maybe a bull trap. Tesla. Everybody's favorite. Tesla. All right, so they furloughed a bunch of people. Many people think that's a bad thing for the stock. It's not. That's how nefarious Wall Street is. Bullish key reversal week last week, folks. So this is not a stock I would be looking to short this week. Or actually, this is a monthly chart. Sorry. Bullish key reversal on the month. The key number to watch here is 565. We need to hold that support level. The monthly chart so far looking really good. Weekly chart. Again, 565, key support. That represents a resistance level within a triangle formation. If we fail, this is what I would do. If I wanted to short this thing, oh my God. Okay, so it's a possible short on a breakout point failure. What does that mean? It means that if we fail to hold this 565 mark and we close down below it Friday of next week, by Friday of next week, these shares could quite possibly retrace down to this lower band of support and continue lower. Daily chart. Same deal here. I mean, I couldn't short this stock until we close down below this support level here on a daily basis. So again, I'm looking for a failed breakout. I want to see a bull trap, because the probability of us retracing all the way back down here becomes very, very high. First price target on a short would be $4.50 per share. So that'd be a nice short. Let's go on. Herbalife. The only reason why I had nothing to do on Friday night, and so I'm going through Netflix and I see Bill Ackman's face on one of the icons, and so I clicked on it. It was about his short of Herbalife, and so I decided, you know what, Ackman had to close out that short. So is it time to short Herbalife? And he closed out that short, I think, in 2017. And the shares are very, very weak. So let's do that top-down approach again, monthly view. And you may be saying, you know what, Bob, we're up on the month here. True. But what we're seeing are topping tails. Sellers above, at resistance. So the path of least resistance at current for Herbalife is to the downside. Weekly chart. I think that this is a bear market bounce. Weekly chart, I want to know. I want to know if Herbalife possible short trade on a failed breakout. We'll keep this active for a couple of weeks. We're good to go. Daily chart. Now on Thursday, this is price action. It's very consistent with, it's exactly the same as the semiconductor sector. This is very, very bearish price action. Not that they're in the same sector at all. I'm just saying it's very similar price action to what you're seeing on the XLK, on the, in particular, the semiconductor sector. You had on Tuesday a bearish reversal day, Wednesday an inside day, Thursday a bearish key reversal day. What do you see on the semis? Not that there's any type of correlation between the two. Same exact thing. Right? So these daily charts are very, very weak. Very, very weak. So getting back to HLF, I think that we break. I think that we're going lower here on Herbalife. And the short interest, which was very high at one point in time in the future, is no longer as high. They have a few days of short squeeze potential here. So I'm not that afraid to get into this one to the short side. Next one up, Marriott. Same approach, top-down approach, monthly chart. We are off the highs of the month. And we have really underperformed here relative to the rest of the market. Stochastics are very, very weak. We have both lines on Stokes. This coming week, as well, this is a monthly chart. By the end of the month, both lines in these Stokes are going to be down below the 50 level. They're declining. So rallies tend to fade, right? So it's a perfect environment for a bull trap. They spiked it up higher last week, right up into resistance. You saw sellers move in. You saw the same thing back here, The week of March the 22nd, follow through to the downside. All you do now is take your crayon out, do one of these. We break down this coming week and appear poised to close down below this lower band of support. It's all over for Marriott. We're probably going to take out the lows of the year. Daily chart. So we have what appears to be a nice higher low here. We've been stopped dead at resistance levels, not one, but two. So is it a short tomorrow? Maybe. If we put in a new daily low, you want to short on that weakness. If the market is weak, okay, I'm good with that. If the market's holding up, though, and we're not seeing real serious selling, then I would be more inclined to wait until we broke down below this lower band of support here. That would be a good entry point to the short side. Right now, I'd want to see how the market is holding up, and then we go leaning into the short side on Marriott if it begins to weaken up along with the rest of the market. USLV, let me take a look at some comments. All right, a lot of people talking amongst themselves. That's cool. Rick Roofing, thank you very much. Let's go, people, and help support great channels. Smash those likes on all videos. Thank you very much. Appreciate that. You made my day. USLV. All right, so what's a good entry point here? For disclosure purposes, we're long of USLV. Put on log. There we go. All right, so where are we at on a monthly basis? So far, a good month. But we still have Stokes, which are declining. So beware. And I just went over that 4-hour chart where we're seeing a bit of a pullback on a 4-hour basis. Now, let's assume that selling carries through to tomorrow. You could see that last week. We rallied right into resistance and we sold off. So where would I look to get or add to my position? Right here at 42.56 looks interesting. But even more interesting is at 40.60. Take note of your Stokes. They're beginning to rise. So I think that this is achievable. This is a leveraged ETF, very volatile. So it's achievable that we pull down to at least 42.56. I may need to book some profits here. And I'll look to re-enter. Daily chart. Yeah, Thursday's price action. You know, we closed up. It was a strong day, but you saw sellers above move in. So resistance is at 53.02. So you want to put as much room between your buy point and that resistance level as possible. Unless, of course, we gap up and close above that support level, that would be a good sign. But at current, it's resistance until proven otherwise. We have higher lows here on RSI. Stokes still look good, but it looks as though we may correct here in the very short term on USLV. So I'm liking the 44 level on USLV. What else do we have? GDX. Beautiful day on Thursday. All right, so we have some resistance above that can't be ignored. Let's go to a weekly chart. What's this high here? High was 29. Let's call it $30 a share. You have resistance at $30 per share. Then after that, 31.04. If we get a pullback this week, we may see a retrace back down to, for an extreme, I think down to 25.94. I don't think we're going to get that, though. I think what we may get is this. 27.93. I would write that number down, 27.93. If that fails to hold, then I would look at 25.94, $26 a share as another entry point. So the way to think about the gold miners, and this makes the assumption that we see more weakness. Let's go back to the futures market for a moment. VIX hasn't changed much since we last spoke. Let's take a look at the S&P 500. Has that changed at all? We're still holding support here. So if we break down on the S&P 500, you should expect the GDX to come in a bit. I don't think it's going to come in as bad as it did on the initial sell-off in the market. Why? It's because gold is just ripping through the ceiling. If you take a look at gold, relative to the S&P 500, we'll go on a yearly basis. This is year to date. So this is gold's performance relative to the S&P 500. Which would you rather own at current? So gold is outperforming the S&P 500 by 33% in only year to date, the past couple of months. On the month, to a lesser extent, but still outperforming. So this is why I'm saying that we may get a pullback on the gold miners along with the rest of the market, but I don't believe that the rate at which they get a pullback relative to the S&P 500 is going to be as great as it was in the past. Because you have gold, which is outperforming the S&P 500, and the gold miners are doing well. They're playing catch up. Thank you very much, Oliver. Super chat. Thank you. So I still like the gold play, still like the silver play longer term, and the charts are bearing it out. They don't lie. So I think that the GDX still looks good. Silver, to me, is really playing catch up. It's not performing as well as gold on a monthly basis, but it's not as overbought as gold is either. Where's my yearly? There we go. And silver is outperforming gold year to date. So we're along with it, love it. We bought it when nobody else wanted it, during the depths of the sell-off. So we love silver, love gold, love the gold miners. Any pullback is an opportunity, and we'll be looking to add more. You bet, Manoj, anytime. Thanks, Albert. Appreciate it very much. You're welcome, Franklin. Let's get likes up to the 70s. Yeah, thanks, Pat. Okay. Hey, Pat, I have a lot of comments in here. Can you just type in that read again, that symbol, if you could? In the meantime, I'll go over Netflix for Trisha. Hello, Trisha. Alan, I wouldn't worry too much about reverse splits on leveraged ETFs. It really doesn't impact them all that much. Okay, Art, can you type in that REIT ETF if you want me to go over it publicly? I don't know if you want me to do that, but I will if you want. Your call. So going back to TECS, this is another ETF that it's a direct seeing fund. I don't like the performance of it relative to the tech sector. Tech sector has not broken out to new all-time highs, yet TECS is now down at all-time lows. So I just don't like the price action. Netflix is short. Better be a short for Netflix. Okay, so we'll take a look. You're welcome, Alan. Okay, Netflix. Let's go high level. The monthly chart right now, we haven't seen a real serious breakdown here. The worst that could be said about Netflix is that you're seeing some real serious topping action. There's a ton of resistance above. Weekly chart. Again, a lot of resistance above here. I'm not seeing a great risk-reward entry point to short this on a weekly basis to get enough reward for the risk that you'll be taking on. Stokes are rising. RSI is still rising. But again, it's concerning. We're seeing all this topping action here. Daily chart. We're rolling over on Stokes. I want to clean this up here a bit. Let's change this. $359 was a support here. I don't like it as a short. I'm not seeing the risk reward being in our favor right now. I mean, you have a lot of support below. You saw buyers move in on Thursday, taking it off the lows of the day, and they may just try to break this thing out if this market doesn't break down. So I'm not looking at this as a short right now anyway. It could be proven wrong, but I wouldn't buy it either. You know, whenever I take a look at a stock and I see that it's rallied off the lows of the day, yet it's still closed red, I become suspect. So were they able to close it green, I would say in all probability they're going to break it out if the market holds up. But I wouldn't short it right now. And if they begin to break support levels, then we revisit it, and then we'll entertain a short. But at current, too much risk, not enough reward. Tommy, hi Bob. Is Dow gonna some significant pullback? I think it will. Personally, I think it will. Florida Boomer, newbie here, symbol, AUMN. It cannot break 50-day or 200-day moving average. Opinion, thank you. All right, we'll take a look at it. All right, first I need to get to VNO. And Kat, you had one up here too. LBS. Okay. Vornado Realty Trust. Looks like it's going to rally. So far in the month, it's looking pretty strong. Weekly chart. Broke out last week. We have a little bit of resistance right up here. But that doesn't mean it can't go higher. Daily chart. There's that resistance level again. I'm not seeing the potential to, I'm not seeing the value in trying to short these shares right now anyway. Let's bring up let's bring it up on a daily basis, and we'll use the fibs to identify where that 50% retracement would be. We've exceeded it. I think that if we break back down below the 43.17 mark, then it has the potential to become a short. But I wouldn't short this just yet. Volume is still very, very good to the upside. Higher low on ultimate oscillator, breaking out, moving up higher. I wouldn't short it just yet. Not quite yet. SLG. What is this? Oh, SL Green, oh, another REIT. This is looking interesting as a potential short. Again, the volume still under accumulation. I think if we close down below this 50.84 mark, that would be very, very bearish. But at current, there's a chance that we just trade sideways in this consolidation range, this trading channel. I would watch for a break below 50.84 on a closing basis. Then I would look to lean into the short side. And I wouldn't buy this thing yet either. What's the other one? ESRT. William, BA short looks interesting right now. We'll take a look at it for you, brother. Hey, Super Chat. Thank you very much, Will. Appreciate that. ESRT. Yeah, this one's a little bit more interesting to me as a short. I'm taking this is a New York-based realty trust, which gets me even more excited about it. You have not seen the counter trend rally as we've seen on the other REITs, and volume is very light. If we close down below 939, where we close? 962. If we fail to hold this support level here, I would nibble to the short side. That would be a breakout point failure. And then I would add to that short on a break below this lower band of support here. So this one is more interesting to me than the other REITs that we just went over. And the key, two key things, actually three key things. One, this is New York based. Two, because New York is a complete disaster area. Believe me, I'm living here right now. Complete disaster area in terms of the coronavirus, the CCP virus. Volume here to the upside is lackluster at best. So you're not seeing any institutional demand. So this one I would prefer over the others at current, subject to change, as a short. Stokes is still rising. RSI is still rising. So there may be some fits and starts here to the upside. But this would be my preferred one to short. Let's take a look at a weekly chart. Be careful here. Stokes hooked up last week. Watch for that breakdown. Right? Just beware of this. We broke out last week on Stokes. Not that that means all that much, but we did. We need to acknowledge that. Boeing. You know what? Let's go with my saved charts here. We've spoken about Boeing quite a bit. Let's go high level first. And your question was, Boeing daily short looks interesting right now. Looks good for potential short term under 120. Okay, we'll take a look at that. And you're basing it on a daily chart. Okay. Let me just get a feel for the monthly, weekly charts first, and we'll go to the daily charts. Yeah. So what I want to do is this. If we open up this week above 164.80 per share, I would not short. There's our lower band of support. And this trajectory is unsustainable. So I do think that there is a short to be had here. Daily chart. Wrong list. Sorry about that, folks. Boeing daily. All right, we need to update this because the first thing that jumps out at me here is this. Higher lows on RSI and a breakout. All right, so we're seeing relative strength on RSI, not relative strength versus the S&P 500. Two different measures. Higher lows on Stokes. These are bullish observations here. And we broke out. Now the question is, how's our price performance relative to those indicators? Because price and volume trumps all. Now I would argue that this is a rally and a breakout, because we did break out. That's under a lot of pressure. But somebody came in here, bid this thing back up. We had a rollover on Tuesday, then Wednesday, then Thursday. They bid it back up. Each day, though, we closed off the highs of the day. This is not conviction. This is not a breakout that's full of conviction. And the only thing that contradicts my statement is the fact that you have volume which is above average. So given the limited price movement, granted we were up on Thursday 3.3%, but given the fact that we traded well off the highs of the day, I get the feel that what we're seeing is a lot of churning right now. Institutional money, they're taking bids. And they're getting out. Because on volume days like this, when I see volume like this, I expect to see long white candlesticks, closes at the highs of the day. That inspires confidence, right? I'm not seeing that here. I'm seeing a reversal day, very, very bearish. The day prior, Monday, was beautiful. That's beautiful price action. No follow-through, horrible price action on Tuesday. Wednesday, close off the highs of the day, same deal on Thursday. Let's take a look at an intraday chart. Let's take a look at the volume bars. Go to a 15-minute chart. Look at these, a series of above average volume to the downside, not so much to the upside on the 9th anyway. You had some upside volume on the 8th. But I will tell you this. I think that what they're going to do tomorrow is they're going to spike it. Because you have a very tight consolidation here. I think that they're going to try to spike this tomorrow. And you're seeing Stokes set up very similar to what you saw set up back here. A nice W formation, and you saw a nice pop-up higher. So be careful here leaning into the short side at current, because, again, I think you're going to get a pop-up. But it's only a 15-minute chart. Very volatile. We'll keep an eye on it. All right. Pat, 80 people hit the likes. Please. That'll be good stuff. All right, I'm going to blow through a couple of these. I'm going to call it a night. LULU. Oh, as a matter of fact, I got Cat here, too. Let me go to Cat first before I forget. LVS. You're welcome, Will. LVS monthly chart looking good. This is discretionary, though. I don't like anything discretionary, especially gambling and hotels. So at current, the monthly chart looks good, but we're not even halfway through the month yet. Good week last week, but not great, not wonderful. We have resistance right above, right there, 52.73. And I think that if we break below this lower band of support, we're going to take out the lows of the year. And this becomes a short real fast, really fast. Daily chart. like a spinning top formation on Thursday. I wouldn't short it just yet, unless, of course, we begin to break down below these support levels. I'd be interested in shorting into strength. If they, for whatever reason, if they gap this up higher, yet the markets are weak, I would take on some risk here and short into resistance at the 52.82 level, but that's probably not going to happen. You're probably not going to get that gift if the markets open up weak. Here's another lower band of support. Stokes is still looking good here. They're rising, higher lows. Okay. So it's setting up at some point in time to be a short. Not quite yet, though. All right. Zoom. All right, Zoom. Forget about the monthly. Well, we are all at the highs of the month, that's for sure. Weekly. Good week last week. Very weak early in the week. Then we reversed to close back above 122.05. Interesting chart. I'd like to see a retest of 122.05, and I would buy there with a stop right below it. Daily chart. Adrian, thank you very much for the super chat. Thank you. Appreciate it. So we have a bit of resistance here on Zoom at 126.20. I think we're probably going to break through it. But again, it all goes back to the market's health. If the overall market is weak, then Zoom may run into some trouble. But let's be frank here. I mean, they've benefited from the lockdown, and they probably will continue to benefit moving forward. So I like the stock. I think that it's bucking the trend, and it'll probably move up higher here. Yeah, they had a bad press release due to hacking, and also they had their servers over in China, and that's going to have to change really, really quick. So I don't think that's a major issue for them, but that's going to have to change. That's the one I tried to bring up earlier, Eric. CNI? Or is it CNL? CNI. I tried to bring this up earlier. It didn't come up. I must have mistyped. Okay. All right. So, a mixed week, a mixed month so far. We're off the lows, we're off the highs. We are up on the month. Stokes are declining. Lower high and lower lows. So remember, rallies tend to fade. Rallies tend to fade when you have that scenario on the Stokes. And that's exactly what you saw last week. Right? Past few weeks, we rally, we fade. We hold on to the gains. We close green each week. But this is concerning. When I see a chart like this, I think you need to see a pullback, a higher low, and then a running start to try to take out a lot of overhead supply up here. So I would not be a buyer of these shares. We couldn't close above 80.55. And if we close down below 78.14, this becomes a short. Daily chart. Yeah, so they rallied it up into resistance, down day on Thursday. I'd be very, very careful here about initiating a long trade. So emphatically, I would say don't do it. We did break out of this triangle formation. If we break these support levels, you got to avoid to the long side. And it could quite possibly become a short. Okay, good, Eric. I'm glad to see that then. Yeah, so I would wait for this weakness to continue because the price action is no bueno. And if we break down below 78.14 and we close there next week, in all probability, you're going to have a lot of shorts looking to lean into it. And with that, I wish I could take on more, folks. I've gone an hour and a half tonight. I'm going to say goodnight to everybody. Happy Easter to all. Thank you very much for the super chats. I really appreciate it. Everybody have a profitable trading week and be well.